Good afternoon, everybody. It is 1 o'clock in the afternoon on this Tuesday, the 2nd of October, 2018. Before you know it, it will be Halloween. Crazy, crazy, crazy. All right. So, a little bit of movement. I mean, actually, on the whole, not a lot of movement anywhere. Um, if we want to take just a step back, look at it in a big picture, if we look at the trading range that we've been in, looking at, well, we could look at XRP as a good example. So XRP, we've got, this is not XRP, this is gold. Well, go back to Ethereum. So Ethereum, go to a daily chart. I mean, this is a pretty tight range we've got going on here. Not much happening. Bitcoin as well. Not a lot happening. In fact, the ranges are getting tighter and tighter and tighter. I mean, we can see this going on here from here to here and here to here. Just a really I mean, it's just getting tighter and tighter and tighter. And then as volume's going down, I mean, really, if we think about it, we're in like a, you could think of it as being in a type of a descending triangle, so to speak. If we were to draw it out, there we go. There's our kind of triangle, except we had a little breakdown today here. We'll see if that holds or not. I don't. The hourly close we just had was a pretty powerful close. Traded up pretty nicely on both Ethereum and Bitcoin. Pretty nice hammer form there. I mean, that was a pretty nice look at some response to any lower prices. But what I want to go over is Gann analysis, relationship between price and time. Now, we kind of went over this a little bit yesterday, but let me get my stuff out. I'm feeling a little under the weather. Okay. Now if I can figure out what chart I did that on. It's Coinbase. Is this it? I think this is the one. CFTC chairman says 2/3 of fiat currency not worth the paper it's written on. Could have told you that. All right. Something I want to point out. There's a relationship between time and price that Gann wrote about, and it's a fairly simple concept. And in Gann's work, 1 unit of time equals 1 unit of price. So if something were to move up $180, then it should also move up $180 in 180 days. Okay, so a square of time and price would be $180 in 180 days. The squaring, I mean, it's going to be very, very dependent on the analyst and the trader or the trader constructing a square that is accurate and then referencing it. But so I did a little plotting yesterday and a little looking and investigating. I want to point something out. So 144 degrees and 144 days, extremely important level in Gann's work. Number 144 is a pretty important number in nature as well. In the square of 9, it's very important. 1 plus 4 plus 4 equals 9. So it's just any sets of numbers that equal the number 9. That's something to pay attention to. But for whatever reason, 144 is always a number that seems to be really important. So I want to look at the all-time high. And I don't remember if we did this yesterday or not. Maybe not. But the all-time high for Bitcoin was at, using Coinbase's data, was at 1,998. And if I look at that and I see, okay, 19,898, how you apply this on a square. So you can find the square of 9 online. You can, there's a couple places that allow you to download the Excel version of this. Now, obviously this version is way more user friendly, but you can get a square of 9 in Excel. I think you could just Google it, and there's a couple places that have files for this. But if you want to be able to forecast long-term or forecast intraday, this is the tool to do it on. So how we find the numbers on a square of 9, because there's a couple ways, and I've never read anywhere that has like been the absolute, like this is the way to do it, but numbers that break away from the standard square of 9 that Gann made, which ends at 441, 4 plus 4 plus 1, 144 reversed, blah blah blah, 4 plus 4 plus 1 equals 9. You know, any chart that has a number value that cannot be put on here, you do a square root. So if I'm looking at like a currency pair, like if I'm looking at the Canadian dollar and it's trading at $1.24, I can use the number 124. But for cryptocurrency, it's a little different. So, you know, I could plot out 30 rings and, I mean, talk about a headache, try and find that. But this is it gets a little ridiculous after a while. That's why the square roots are more effective here. So I look for the square root of 19,898. Square root of that is 141. Round it down to 141, and that is right over here. Pretty close to 144 actually. And then what's really nice is it's nice to look at degrees from price according to, you know, where an important zone is. So 141, square root of that, 19,898. I want to know what are some price levels from that. So I could get the squared ranges from it. I could get the squared values, numbers that are trine to it. So in 120 degrees, and sextile 60 degrees. But 144 days or angles is fine. 144 from 141 brings us over to one of these over here. And the number we're looking at is 76. 76. Okay, just keep your heads around this. 141 equals 19,898. That is the yearly high. Okay? Yearly high, 141. 144 degrees from this, we go to 76. What is 76 squared? 5,776. That is $2 above the all-time low for the year. The low is back here. 5,000 or somewhere around here. Right there. Depending on your data. It was in June. What did I write down? June 28th. Okay, looking at Coinbase's data, this was the low. Or Bitstamp's data, I think I was looking at. Yeah, Bitstamp. Bitstamp's data, 5,780. I was looking at something. It was $2 above. Okay, from the all-time high to the yearly low, 144 degrees. That is the price level. That's important. That's a significant thing. Then we look at the date. January 6th. And that was the date of the all-time high. So just going to move the square of 9 to January 6th. There it is. And 144 days from January 6th. Sorry, 180 days. July 8th. Which is pretty close to that low we found in June. The end of June. And then about a week later, we had that 180 degree relationship. That's pretty crazy. Those things work out pretty nicely, which basically means like from our all-time high to where we found our yearly low, it was 180 days. 2 90-day Gann cycles, 4 45-day cycles, however you want to look at it. So what I did is I plotted out for the rest of the year the extremes. If we look at Bitcoin from the so we know that Bitcoin has a cyclical expansion season between September and December, and we know that Bitcoin has frequent and exponential moves. And we know that traders, investors, and speculators, every year there's been a bull run, everybody says it can't go higher. But it has, and it does. And it if we were to measure expansion phases as a percentage, they're pretty massive. Is there a point when it scales down? I don't know, maybe. But from the lows of January 2017, that was a 2,398% move. It's probably the biggest one that Bitcoin's had. And then if we look at December of 2016 to December of 2016. That high to the low of 2016. Maybe I should turn it around. A 223.83% move from $352 to $1,139. We see this repeated over and over, with the exception of, I think, 2014. We've had an exponential drive in Bitcoin's value near the end of the year. And there's nothing saying that won't happen again. This is the 10-year anniversary. Believe it or not, Bitcoin is 10 years old. Depending when that birth date is, we talked about that yesterday. It could be of importance, but we'll see. Okay, so moving on. These are some of the price targets I was looking at in the extreme. Do I think they'll get here? Yeah, as much as I think we'll fall to zero. It's possible. Is it probable? Absolutely. It seems a little unbelievable to me, but so has every other move that Bitcoin's had. I mean, so let's zoom these things out. So 144 degrees from the June 28th low is November 2nd, and 180 degrees from there. So we're saying 144 days. 144 days from June 28th is November 22nd, and 180 days from June 28th is December 28th. And then in price, 144 degrees from the yearly low, there's a there of 5,776. There's a few extremes that we can see. So the first one is the 21,603. The next is 39,601, and then 180 degrees from the yearly low. There's a couple more extremes, and those the ones that we're looking at are the first one. I don't think I have it up here. Is like 18,769. That's closest. Then it goes up to 35,000, and then all the way up there is the 61,000. Now there are some crypto fund folks who have been in this for a long time, and actually one of them was just on Fox Business, was it today, and said that he was maintaining his call for Bitcoin to be above 30,000. I don't know. I have no idea. That's a little crazy. But if we're looking at Bitcoin, all right, let's I don't know, maybe let's assume that Bitcoin finds some type of equilibrium between 5 and 8,000. Then the altcoin market is the one that has the greatest growth potential, supposedly. So we're looking at, and that's including Ethereum and Litecoin and Ethereum Classic and Bitcoin Cash, those Coinbase ones. So we're looking at all these other altcoins out there that have not had a lot of activity since the bear move started last December. So it's very, very possible. If there are folks saying that we could not see Bitcoin double to the 40,000 range or higher, that's I don't know why you think that it can't happen, because tell you what, I've been in Bitcoin for quite a while, and every year it reaches some top and the chart looks like this. I mean when the chart every year looks something like this, you're like, okay, that's got to be the top. This can't possibly go any higher. But then every year it surprises you. You look at this and you're like, oh my God, certainly can't go any higher than that. But boy, does it ever. Trying to call tops in Bitcoin is dangerous. Okay. Does anybody know what the catalyst was that made Bitcoin shoot up so much last year? Because there really wasn't one. There really wasn't. Off the top of my head, I really can't think of anything that would have shouted everybody FOMO into cryptocurrency, because there just wasn't any major catalyst or anything that would have suggested we would be going up that high. Now let's assume that this is as high as we get, or if we are going to trade higher, it's going to take longer to get there. Then we have to assume, well, we don't have to, but that there will be more growth in cryptocurrencies, and that's going to have to come from somewhere. If Bitcoin is not going to be the primary driver of higher values, then that is going to rest on individual other cryptocurrencies to do that. So where do you find those big pump coins? Where do you look for those ones that are going to have a huge, like a whole lot of growth? I mean, Cardano is one. I mean, we've reached, let's look, yeah, we'll do the dollar valuation, but Cardano's created all-time lows, and it is down 95.57%. Okay, so it was up at $1.40, and now it's at 8 cents. Struggling to keep 8.5 cents. Looking for something that's going to grow a lot. If we assume that there will be growth returning into the market, this is one of them. Definitely. Even EOS started out, excuse me, last year down here in the dollar range. Sorry, the 50-cent range. Went all the way up to, what was that, high of 23 bucks. And then fall. Now, this is the other thing you should notice too, in the cyclical nature of cryptos, and I think this has been the most evident in probably the last 2 or 3 years, I would say. Look at Nano, maybe a good example. Got to look at something that's older though. XLM, no. Ripple? No. Dang it. Hold on, what's on Kraken? Ethereum, Bitcoin Cash, Ethereum Classic, ICN, Zcash, I bet ZC. Yeah. Okay. There's this kind of a double wave that you get. So when Bitcoin has that big pump and it has a sell-off, there's one other kind of big boom that happens. When Bitcoin sells off after its yearly bull runs, a bunch of money flies into alts. And depending on the alts you're in, some of them sustain a rise going for up to 2 to 3 months after Bitcoin has already started to nosedive. And then it takes a while for the altcoins to catch up. But definitely, December 17th was the all-time high of Bitcoin. And then we did see a lot of currencies transition of Bitcoin into altcoins. Notice that Ethereum's all-time high was hit like a month after Bitcoin's all-time high. That's probably a good example. TRX extended a few weeks after Bitcoin's big drive. Where's Steam at? Steam had a stupid jump last year. I mean, this was insane. Steam into January. Steam got all the way up to, what is that? 925? That's just nuts. It's trading down how much? 93%. It's down 93%. What's crazy to me is that there are people still actively suggesting to short this market, which, I think that's fine to do in equities, and maybe it's fine to do in cryptocurrencies, but, when things reach all-time highs like if stocks reach all-time highs, those are usually good times to buy. Oddly, that is that's a thing that goes against everything you hear about, amateurs buy at the top and sell at the bottom. If we're talking about like stocks and stuff, it's kind of a little different because those old ceiling prices, those new all-time highs generally become the new floors. In cryptocurrencies and in forex, that is not the case. Things oscillate a lot. So, looking at Steam, or really anything, even looking at, let's take a peek at Ethereum. There is some grade A stupid that goes on when people suggest that this should still be shorted. I mean, they could be right, but nothing in technical analysis or in trading, actually, maybe not even technical analysis, but just trading in general, some common sense, from your baby's first book of technical analysis and trading, you don't short a market that is already down over 80% and is below its year-over-year lows. And that has been trending down for 10 months. You don't short that kind of a market. That is just stupid. Like, you've missed the boat. Because at most, there's maybe one leg down, and that would just be like an exhaustion move down. So it's very, very foolish to short down here. Because if you're somebody who's already if you've been in this market all year long, which I assume those of you watching the recordings and watching live, I'm going to assume a lot of you and a lot of us have been in this market either before 2018 or you just have balls. If you've been trading or investing or been very active in cryptocurrencies, 2018 is really nothing new. I mean, it is a very, very long drawn out. I mean, if we look at corrective moves in Bitcoin and look at the amount of days, this is a longer one. I mean, if we look at 2017, that lasted 35 days. We move back here. Oh, wait, that is Ethereum. I want to look at Bitcoin. So if we look at Bitstamp, let's go all the way back. I think Bitstamp has the oldest data you can get in TradingView. I think this goes all the way back to 2010, 2011. So let's look at the first big spike. That was over here. How long was the recovery period before we had a rise? Probably at that volume pump right there. 173 days. Then we had a drive. How long did that down move last here? Quite a while. that was a long one. When was this? Oh, 24. Oh, this is Mount Gox. Duh. No kidding. So Mount Gox was a blistering time. Does this pattern look familiar? I mean, those of us who've been into crypto, I've gone over this before, but this pattern is also this pattern is also, as we get to the recovery, you could call this one part of that too, but this pattern. There. We see it there. I mean, this is this repeats itself over and over and over. So looking at these recovery periods, we go all the way back to 2012. Looking at that first pump up here, we had a 173-day bear to consolidation before the drive. Then we had a Mount Gox issue back here. This was a 520-day. And that extended on until we caught, let's see here. Actually, didn't do it after that. We didn't catch, yeah, we had a pretty long driving up period. I mean, from 2015. After that, that's pretty much how long that lasted. There's a few minor bear moves in here, but everything's pretty much corrected. So if we discount the Mt. Gox years, this has been the longest move down in cryptos. It's been a bit of a dive. So, but this is like technical analysis 101, Dow theory 101. I bet that this chart could be in any educational starting book on the analysis of a bull market or market phases or a bubble. Even though we don't know what the definition of a bubble is really yet. There's a lot of them. But we have clear description of the institutional participation accumulation, followed by the first expansion phase public participation, and then this is the public participation phase, followed by distribution. Distribution happens around here, extends all the way up to there, and then the distribution lasts before there's a panic, and then we start a bear market. And the signs of an end of a bear market are when lower lows stop being formed and sentiment is still negative or it gets worse, but prices really don't create any more lows. Okay, we're really not concerned about the highs in a bear market. We're concerned about the lows. And to be perfectly honest with you, we have not made any new lows. Okay, yes, the low of 59.20 was broken back in July by like $200. But structurally, no, there has not been a new low generated in cryptocurrencies. That bottom has been formed and it's still there. And as long as there's not a new one that is formed, that is still the bottom. And it has lasted ever since February, March, April, May, June, July, August, September, going into October. That is almost 8 months of a new low unable to be formed. And in Dow Theory 101, after you have a major bull and then a bear phase down, you get consolidation before the next expansion. Now, I gotta find this statistic here. Okay, yeah. So, how long did we last? Let's see. It's about... Bear markets don't last as long as bull markets. I mean, we could say from all the way there. I mean, we're like at 9. I mean, average bull market lasts like 9.19 or 9 years, and then bear markets last 1.1 to 1.5 years. So this is definitely within that range. If we're going to follow what equity markets do, then this is definitely within that range. And the tail end of a bear market actually sees a rising market. And so that is what we should see. I mean, bear markets are supposed to be swift, fast, and violent. That is their nature. And then I think people associate bear markets with a constantly driving lower market, but that's not really true. It's more like there's a long period of nothing that goes on. And we're kind of in that right now. So, and if we're structurally looking at this like a triangle of sorts, I mean, this is a perfect example of how triangles trade. So if we were to just draw here to here, or here rather, just draw a triangle here. And the nature of triangles, when you trade triangles, either short term or long term, is that as you go into it and it gets closer and closer to the what is that called? Is that the apex? Oh God, I'm having a day. Volume typically drops off. That is exactly what we're experiencing here. As you get further along to the triangle, volume drops off before it finally, the volume picks up and you see a breakout. Very, very, very normal. So that's our bullish outlook looking here in October moving forward is really, and I've been talking about this ever since last month, is that any moment, any day between now and December, we should see a pretty strong drive into a new bull market. Now there is the case that we could have another move down. Okay? Because if we look at this like on a monthly chart, this could just be, I mean, first off, on a monthly chart, this looks like a bullish pennant. I mean, this, if you're an Elliottician and we want, I mean, where's the Fibonacci? Ooh, it's even better that we're below that. But if you were an Elliottician and you're looking at your supra millennial move, which nobody really looks at that. There's our first leg, and then we have our second leg down here. That third leg starts somewhere over there. I mean, this would be we'd be at the beginnings of our third motive wave higher. But we could also say that the ABC has not completed yet. Our first corrective wave is not done. There is a case. There is a case for this to be an incomplete C wave, or a corrective wave, our first corrective wave. And in fact, some of the Fibonacci levels do support that this could move lower. I know that's probably not what you want to hear, but that's the truth. Really, there's not a lot of price move between where we're sitting and where that third leg would go. I mean, we're talking like 5,000 even. And that would be a pretty swift move, but if we're looking at this as if this had not corrected yet, then yes, we could be waiting for the completion down here somewhere. I don't know. There's so much going on at the bottom there for so many months at this level that it would be very, very odd for it to fall down. I mean, the volume profile is just really I hate how they do that right away. So there's our furthest low. Obviously all the consolidation down there, but as we move forward, we look at the last fall rising up to here. I mean, this is our highest volume node that we're trading at right now. But the good thing is that I know we went over this a couple of weeks ago, is that there's not a lot of volume traded between here and then down here. Okay, there's an actual volume trough here. And so if you're waiting for lower prices and prices do drop below the and yeah, here's the other thing, is that we've actually we've had some periods, we've spent, you know, a good amount of time ever since June testing in the 6,000s and the high 5,000s, and it's a low volume node, so prices should really just capitulate down into here before settling around that 4,500. I mean, it's very easy for price to slide down here, but also looking at the fall of last year to this year, the volume profile shows a very easy move up. So either way, I mean, the nice thing is that if we do get a bear move, it should be very fast. I mean, it should be so quick that if you were gone on vacation for a week or shorter, I mean, you would come back and probably not see a change in your account. All right. Saying that, the last couple of hours have been pretty interesting. We've had clear drives lower, but we're seeing a lot of pushback. Bitcoin in this law of vibration, we're coming up against this not a square price of time, but this is a shared Fibonacci range here. We've got on a longer swing and a shorter swing, we've got the 50% level here with that 236, even though the 236 is not very important. But we see a bounce here, and then also there's this pivot right here. This red line is a pivot in time. And so the behavior here is for prices to go in the opposite direction of the trend. And we've been in a down move for a while. This should be a pretty bullish responsive time pivot. Four-hour candle looks pretty nice. I mean, that's a nice looking candle right there. For a bull. That looks pretty nice. I think Ethereum has a pretty similar. Yep, pretty similar. I mean, that's bounced right off of that 50% Fibonacci ratio right there. Just bounced right off of it. And it's been trading in between those fib levels pretty nicely. But yeah, it's got a pretty nice price action there. If I look at it on the this is a new, but coming back into that lattice structure, and Bitcoin I believe is as well. That's a pretty nice bounce there. Lots of volume there, folks. Look at that. The noon Central Standard Time had a lot of volume at the very end. Really supported price back up. I think the order books actually supported that. I think I saw on GDAX's data here that there was a 700 on the bid. Sorry, there was an order of 700 even Ethereum on the ask, and I don't know if they pulled it or if it got eaten because this thing just went nuts with the green. I think some of it got eaten up and they must have pulled the rest of the orders off. In Binance, yeah, there's not a lot of activity. Yeah, same thing. $227. Yeah, the order book's pretty thin up here. Thicker right there. What's Bitfinex look like? Ethereum. There we go. 1,000. Yeah, there's a lot of supportive. There's a lot of bids there. Quite a bit. Somebody pulled them. All right, like I tell you what, I don't know if anybody's ever traded futures before or used an order book. What? Like, there's a lot of spoofing that goes on in a lot of these other exchanges. It happens on the U.S. exchanges, but there's it's illegal to manipulate the order book where you'll have a whole bunch of resting orders sitting there, and then a whole bunch of buyers step in because they see a lot of the support, so they'll get in at the market and start taking apart the ask, but then the market makers they'll pull the orders, or they'll pull the orders right at the front off the bid, and it'll create a really thin book, and then it's really easy for shorts just to drive in here, hitting stops and then hitting people's stops who thought they were going to be able to go long pretty easy. So there's a lot of spoofing that goes on. And you can correlate it to the size of the order at the bid and the ask to how many were traded at the it doesn't add up. Let's see. Bitstamp, where are you at? Ethereum dollar. Where are you at? That's Bitfinex. I want Bitstamp. I don't see it. Oh well. I think we see some supportive price action going forward. We've had a pretty dull move down here, not a lot of activity. This is all the all the tellings of an end of a consolidation era. Yeah. Really don't know what else to say. Any of the coins that I've looked at and talked about, I either have resting orders on already still, or I there's really not a lot to do but kind of park and bark for a little while. Basic attention token though, there is some signs that that the market is wanting to move a lot higher. Where if you look at some altcoins, you'll see them getting a nice drive up, pausing up there. I mean, we're seeing that. We're seeing some might be an altcoin led rally. We'll have to watch it though. But anyways, we'll quit a little bit early. Hope you guys have a good rest of your trade day. Hope you had a good Monday. Please don't forget to like and subscribe. And yeah, I will talk with you all tomorrow. Bye-bye.